It's Tuesday, April 30th. The Fed highlights a big week ahead. Stocks and mortgage bonds are both lower to start the day on an action-packed week. So the Fed will be one of the main focal points with their two-day meeting kicking off today and ending tomorrow with the statement coming from Jerome Powell at 2 Eastern Time. Press conference is going to follow that meeting. So the Fed is not, unfortunately, going to cut rates in the foreseeable future, but that is to be expected. In fact, the market's only pricing in 125 bips cut in 2024. But the Fed meeting, Powell did say at the last one that the slowing down of the balance sheet reduction of fairly soon, which could be good for rates. Currently, the Fed is allowing up to $95 billion per month with a B to fall off their balance sheet from bonds and treasuries they own. But with the Fed minutes, we found out that once they start slowing down the reduction, this may be cut in half, which means the Fed could be buying up to $30 billion per month in treasuries, which could help absorb some of the supply in the market and potentially help mortgage rates move lower. So we heard yesterday from the Treasury that at 3 o'clock Eastern as to what the amount of funding the U.S. government needs, meaning how much more debt we have to issue to keep things going. The Treasury also recently announced for the first time in 20 years that they would be doing buybacks of treasuries. We don't know how much yet, but this too could help absorb supply in the market. It's also Jobs Week, with estimates looking for 180,000 job creations in the ADP report on Wednesday and 240,000 job creations in the BLS report on Friday. These reports have been unfriendly to the bond market, but the bar has been set high at 240,000 jobs. The Case-Shiller Home Price Index, which is the gold standard for appreciation in the U.S. for home prices, rose 0.4% in February, 0.3% in January, 6.4% year over year, and that's extremely strong, showing that buying a home is still proven to be one of the best investments out there. So the technical analysis continues to show mortgage bonds trading at a wide range. There's definitely room for improvement as it pertains to interest rates. We'll see what fairly soon means after tomorrow's meeting and if the Fed slows their balance sheet reduction. We'll continue to keep an eye on this and report back. We are starting off the day floating interest rates ahead of the Fed meeting tomorrow. I'm Jerry, the mortgage guy. So long for now. Ciao.